Welcome back to the channel, everybody. My name's Artie with CoinCasso, and in this episode, we go over the top news articles written in the last 24 hours so that you guys can stay up to date and informed on everything going around in the cryptocurrency space. Let's not waste anybody's time and jump right into this first article, which is titled, Bitcoin's price is rising despite a dull halving. Bitcoin's price is starting to make gains after what turned out to be a rather dull halving event. With daily active Bitcoin addresses at the highest level since 2018, interest in Bitcoin could be heading even higher. The world's first cryptocurrency is now trading above its 10 and 50-day moving averages, a bullish technical indicator. This reversal comes after a huge 10% drop in price on May 10th that led to the bearish sentiment ahead of the Bitcoin halving, which occurred on May 11th. While the halving was pretty much a non-event for most traders, many are keeping an eye on various Bitcoin-related statistics beyond price. Difficulty, which determines how demanding it is for mining machines to mine a Bitcoin block, is one example. Another metric to watch is the number of active Bitcoin addresses. On May 11th, the number of active addresses on the Bitcoin network totaled 943,000, the highest number since January 28, 2018. That was during Bitcoin's frothy 2017 to 2018 bubble, when prices went as high as $19,915. So most of the people that became interested in Bitcoin as a result of its halving might be tempted to stick around if the price increases. Like they say in show business, there's no such thing as bad PR. With all the publicity around the halving, all the new people getting into it, all the new Bitcoin addresses that have been created, more people are jumping on board the cryptocurrency train. It hasn't dropped down any further, so it might actually just go up. And on to our next article of the day, which is titled, Stablecoin Supply Breaks 10 Billion as Traders Demand for Dollars Over Bitcoin. The value of assets for all stablecoins surpasses 10 billion Tuesday, having surged by over 70% in just 2 months. Stablecoin supply growth comes as more cryptocurrency traders choose to trade alternative cryptocurrencies or altcoins using dollar-backed digital tokens instead of Bitcoin. The most stable growth comes from Tether, which represents almost 90% of the total stablecoin supply. The largest Tether market measured by trading volume are supported by two Asian-based exchanges, Binance and Huobi. Almost every exchange offers the choice to trade between assets priced in different quoted currencies, usually dollars or Bitcoins. Now, there could be multiple factors on why Tether and other stablecoins are actually going up, meaning more people use them, not that their value increases. One, because a lot of exchanges require you to actually use USDT to buy Bitcoin. So you can put in USD, then you have to buy USDT, then you can buy Bitcoin. So it's kind of like increasing their transactions, because that's how these exchanges make their money, is off of transactions. So the more transactions you have, the more money the exchange makes. It's a nice loophole for them. The second thing, which isn't so common, but it actually happens, a lot of people that aren't familiar with cryptocurrencies are looking at different cryptocurrencies, and then they see the symbol for Tether, and they've even asked me, hey, what do you think about Tether? It's a good price. Will it go up? And I just shake my head saying, it's pegged to the US dollar. It's never going to move. Continuing on to Article 3, which is a big one today, titled JPMorgan Bank Takes on Coinbase and Gemini as its first crypto exchange customers. Its CEO once called Bitcoin a fraud, but now US banking giant JPMorgan Chase has added its first cryptocurrency exchange customers. Sources told the Wall Street Journal Tuesday the bank signed two popular regulated exchanges, Coinbase and Gemini. The fact that both exchanges are regulated in the US was apparently a factor in the approvals, which still took a lengthy period of vetting. Accounts for the two crypto firms were approved last month. The move by JPMorgan is notable in a nation where banking services are hard to come by for the firms dealing with cryptocurrency. They're viewed as high risk by the banking industry. Until now, the exchanges and other firms working with digital assets have been served by few cryptocurrency-friendly banking institutions such as Silvergate. They say as crypto matures, there are increasingly many companies that have perfectly robust risk management systems and do have the ability to comply with those laws, and they shouldn't have trouble finding a bank relationship. With crypto firms now accepted by a major bank, it's possible other institutions may follow suit. The traditional financial industry has been becoming more open to the financial technology that it proves is a worthy investment at the time when the market's favorite assets are struggling. So far this year, Bitcoin is up 20%, while the S&P 500 stocks index is still down 9.3%, and oil has fallen 66%. Traditional safe haven gold is up 11.5% at a time when markets have been reeling from the effects of the coronavirus pandemic. Many people in the past have been under the belief that Bitcoin and cryptocurrencies are a complete scam, they're worthless, they're not valued as anything. But having a huge financial institution like JPMorgan Chase use their services to back two major exchanges in the United States is a humongous move and will take us in the step of wider adoption by the global population. Not only that, but big hedge funds like the one run by Paul Tudor Jones are now allocating 1 to 2% in Bitcoin futures. When new things come out, there is a long period of early adopters. Then it starts taking off. Then big businesses get in. And that's when the global population says, I'm okay with this. It's a very, very long transition from when the time a new thing is invented to the time where it's fully used by everybody. Think about the internet. When it first came out, very few people use it. Today, everybody uses the internet. Cryptocurrencies are just the internet of money. And that's it for today's video, guys. I hope you guys enjoyed this video. Please don't forget to like the Facebook page, subscribe to the YouTube channel. Join us again tomorrow when we go over the top cryptocurrency prices as well as the news. Thanks for watching, and we'll see you tomorrow.